In this video, I want to go over why your trading system's results can be different than your statement. So first of all, this mainly occurs, this is about strategies that hold positions overnight. So for example, 60-minute breakout was long on Friday. It held a position, exited on Sunday night, or actually around 3 a.m. on Monday morning on August the 2nd. So it held this position overnight. And so your broker can mark this position at the settlement price. We use the last trade price of the day. We find that to be more representative than the actual settlement price. Settlement prices, the times for the settlement prices are related to the day sessions, and they're not as representative in my opinion. So we want to use the last trade price in our calculations, and the broker still uses the settlement prices from the day session, which could be 1 to 3 hours prior to the market closing. And so for example, in the stock indexes, the settlement price is usually a price around the 3 p.m. Central Standard Time close, and you can see the market can move higher at that time or lower to make the actual position. And so here is an example of Friday's trade in the 200K portfolio. We had two open positions, one in the NASDAQ, one in the S&P. The hypothetical results for the 200K portfolio was minus 1322.50, and now your statement P&L was minus 1978.65. So you look at that and you say there's about a $650 difference. Why is there a $650 difference between my statement P&L and the hypothetical P&L? And so we break it down. Let's look at the closed net profit, the actual closed net profit, minus 1858.65 with slippage and commission. These are real trades. And the open trade, open net profit actual is minus 120. What is that based on? That is based on the settlement on the statement. And so we had long 1 ES at 43.99, and it was long from 43.89. The settlement is 43.89.50, so minus 475 is what the statement said. We were down minus 475, but the last price at 4 p.m. Central Standard Time was 43.95.25, so it was only down 187.50 based on our calculations, while the broker settlement says minus 475. And then long 1NQ from 14.938, the settlement price around 3 p.m. Central Standard Time was 14.55.75, which means the trade held at a long trade at 14.938 was up 355 on that trade. Now, if you take the difference between minus 475 and plus 355, you get minus 120. So minus 120 these are the values on the statement. Minus 120 is the open position. Minus 1858.65 is the closed net profit actual, and it's 1978.65 statement P&L. So to adjust for the differences in where we mark the prices and where your broker marks the prices, the last price versus the settlement price, you still keep this closed trade net profit. So that should say closed net profit actual, not next. So that's the same as this number up here. Now all we're adjusting is the adjusted open position net profit. And so once all these trades close, it should all settle out minus any differences in slippage and commission. So any differences mainly in slippage. And so we have the 4 p.m. Central Standard Time close, the market moved higher from the 3 p.m. So that trade was down minus 187.50, and this trade went from plus 355 to plus 570 on the NASDAQ. And so your adjusted open position net profit was 382.50, and so when you add these up, your daily P&L actual based on the last trade prices versus the settlement price is 1476.15. There's still about $150 difference. We had some extra slippage on Friday. We had July was kind of a month with more slippage, and so there can be differences that are different based on slippage. We're strictly talking about differences, big differences, $500 differences per contract between the hypotheticals and the actuals, because the settlement price is ends up being a price that is before the last price. And so we use the last price, brokerage uses the settlement price, and I wanted to share that with you. And once again, these are based on the 2 trades from Friday, 60-minute breakout, ES, long from this price, 43.98.25, filled at 43.99. The settlement price was around this time frame, while our last trade price that we used is this. And for the E-mini NASDAQ, 60-minute breakout in Q, the trade from this is the trade we're looking at. The settlement was at this time frame, 3 o'clock Central Time, while the last trade price was at this point. And so that is why there is a difference. Both of those hit their profit targets today and are up. So that is why there can be a difference on your trading system results versus the actual statement for positions that hold positions overnight.